Hello everybody, welcome to TraderMerlin Show. Happy freaking Friday, everybody. Cheers. It's an Angel's Envy kind of day from, I'm pixelating today. Sorry for the psychedelic shirt. I didn't realize it would be showing up so quirky like that. I'll try to change that as we progress through today's show. But anyway, happy Friday, everybody. Hope you had a great trading day. If you're short like I am, it was a good one. So cheers to the shorts, and we'll talk about that because as some of you have been asking, is this the bend at the end? Maybe it is. All right. Cool. Thanks, Shadow. Says, thank you. Just finished your OTA Crypto Elevate. Wow, it was great. Lots of crazy stuff out there with that crypto world. Good to see you, Jay, Shadow. Chris, happy Friday, my friend. Les Gold as well from Cape Canaveral. Mikias, good to have you as well. Eric, Satosh, are you related to Nakamoto? Jimmy T, Terry, Tomasina, Margaret, Mario, and Not Bad Whiskey. I'm going to call you Great Whiskey from now on. Anyway, hope you guys... the new NFT shirt. Are you right? It does have that kind of NFT look. Maybe I could just sell this shirt for $900 million. Anybody want to pay $20 million for this wonderful pixelated shirt? I'll let you guys do it. All right. Today is obviously a weekend type of show, which means I've got a glass of whiskey in my hand. No tuxedo jacket like you see in the photo, but I'm going to go over a couple different things. Number one is looking at the debt ceiling that is quickly approaching, and I think that's part of the reason we saw the markets do what they did today. Now, obviously, we saw a lot of market negativity. A lot of these indexes down about 1% or more, so that will be where we start things off. So let's go look at some charts here. Unfortunately, I sold some puts today as well. Here is your SLV. I was exercising on SLV today. Did not think it would drop that much, but not a great day for SLV. Unfortunately, I am long starting at 21. We'll manage that on Monday. Probably sell some covered calls against it. Maybe covered calls might actually put some stop loss on it, but it's right at an area of demand that I'm okay with owning at 71. No big deal. And it's just, as you sell these things, generally I'm not looking to be executed. Got executed on this one, and my Russell expired worthless. So let's start at the bottom. Right here with the NASDAQ 100. And I like this one. Some of you have been asking, is this that quote-unquote bend at the end? And, I can't say that, yes, it will be the bend at the end. I think a lot of it is just letting things pan out. But I think we'd all agree that the past 2 weeks have not been great. We can see markets rolling over. Here is the trading that started this week. So let me go right to the beginning of the week. It was pretty flat, started to look up, and then all of a sudden today it was a big ugly day. 1.4% down for the NASDAQ. The good news for anybody who's looking to go long on the NASDAQ is you pulled right back into an area of demand, right? It's certainly a most recent area of demand that has been built up, but that area right around 15,290, which is right where it's at right now, is a decent area of demand. So really for me, it's about what happens on Sunday night on the futures market and also what happens going into Monday. Now the big thing, yes, I hope you have sound. I hope you have sound out there, Shadow. I've got sound. I'm sure you guys can hear me, right? You guys all hear me. Give me a big yes if you can hear me, just because I don't freak out. This, coming back into this area of demand is good, but if we can get a close below that next week, I think you'll come right back down into this range, which puts about another 300-point drop in the NASDAQ, which is 2%, and then we'll see from there, if we can break that 14,800 mark. Not that this is the end. It just seems like it's getting weaker. And I'm not trying to predict the top here, but as I have in the past. But it does seem like it's slowing down. You guys both know. Awesome. Thank you for the support there. As you guys know, I do have a short position. With puts right now, I haven't got into the equity markets and bought or sold short anything, just really with the option side of things right now. I may go into the futures if we start to drift down lower, but right now it's just puts for me, buying puts directionally. I was just thinking I might get out if today rallied, and lucky for me, it sold off on good volume. You also had an 11% increase in the VIX. For those that don't know what the VIX is, it's your fear gauge. As you can see, fear spiked up a little bit today. Nothing overly dramatic, right? Certainly because in the position that I'm in, short, I would love it if all of a sudden we saw this VIX spike up to, let's say that 80 mark. That would be great for me in a position where I've got a lot of puts, and I'll probably be adding more to it. But, we're still in a relatively low area with regards to VIX, which means that some people were fearful today and bought puts. That's what generally increases the VIX when there's a more people buying put options, which are bets that the market's going to go down, versus call options, which are bets the market's going to go up. When there's more puts to calls, the VIX rises, and you can basically see a lot of people running to protection today with options. So, yeah, you could argue that, Margaret, that VIX is in supply, although I don't necessarily play those supply and demand zones for the VIX. I don't think that has much of an impact on it with regards to supply and demand as you would on something like the S&P futures or stocks, etc. So, showing you that one, we'll move up the ladder from 1.44% slide in the NASDAQ, which, you know, this isn't the end, guys. It's just a pullback. Now, this pullback could turn into I'll call it a retracement. So a pullback pulls to me into a retracement, then all of a sudden it could turn into something real ugly, but we're going to have to wait probably a week or so to get that. I will tell you this, my 2 cents. And I've done my best to steer politically down the center here, not going to the side of Republicans, not going to the side of Democrats, and even libertarians, just stay center road so we don't create enemies. Right now, I think you'd all agree, it seems like we have the most divided political officials I've ever seen. It almost seems like one side has a good idea and the other side agrees with it, but they won't agree with it because they don't want to agree with the other side, right? It's one of those stupid things that's going on right now, and it seems like it's the most polarized it has ever been. Now, the debt ceiling, of course, is a discussion of let's raise the amount of spending that our government does. And you know, when you saw President Trump back in July 31st say, we're going to suspend the debt ceiling limitations because, you know, whatever is going on is going on. What's interesting is that wasn't even after COVID. That was before COVID hit where Trump did that. And I think it's kind of funny because the federal budget was $22 trillion at that time. And he basically said, we're going to freeze it. We're not going to worry about this. Just spend what you want. And ultimately, we jumped another $6.5 trillion since that time. So from 2019 in July 31st to June of this year, we jumped from 22 trillion to 28.5 trillion, a pretty significant increase. So right now we're at a point where they have to stop spending, right? It's great if they spend because yes, it stimulates the economy, but we have to pay for that somewhere. And ultimately that's going to come on the shoulders of you and me, which is, you know, taxes and raising expenses, etc. So the debt ceiling, if it doesn't get raised next week, if we go to a vote and we still have this polarized political senate of stupidity where I agree with something, I'm not going to vote on it because it's your initiative, I believe that's what's going to happen. And Janet Yellen came out with a strong caution about the debt ceiling today saying, look, if we don't, or maybe it was yesterday, if we don't raise this debt ceiling, there's going to be some catastrophic consequences. And of course, we've talked about this for the last 10 years that I was doing power trading radio. Hey, NJ, thank you so much. Thank you so much. Appreciate the contribution, as usual. If you look at historically, and John O'Donnell and I have talked about this many times, where in the past, when you come to the debt ceiling, it's kind of a foregone conclusion. They're going to raise the debt ceiling because what's the consequences of not raising it? We default on our debt. If the U.S. defaults on the debt, then this NASDAQ 100 is going to crater. It's going to go down a tremendous amount. Yes, they're all paid shills, Brendan. They're all paid shills. But yeah, part of me, I hate to say it, part of me is kind of hoping that, we don't raise the debt ceiling and we default and all of a sudden government shuts down. It'd be horrible for businesses, for our economy, I feel, overall. But, when you're net position short, cheers, capitalize on the way down. Another glass of Angel Envy for me, please. So anyway, that's what we got to face next week. Will be that vote. To me, it is going to be very telling what the two sides bicker about. Obviously, the Republicans don't want to raise it. The Democrats do. Spend versus don't want to spend. But if we default, that's the big fallout of it. To me, it's not about spending or not. It's, can we raise it enough without defaulting on our debt? And I don't know. I don't know that situation. I'm glad I'm not a voting member, but that is going to be the main topic for this weekend and next week. And I believe that's why you saw this market do what it did today. A bunch of jitters. People feeling uncomfortable with it. Let's get out before the weekend starts. So there you go. Brendan, I think they will too. I don't think they have a choice. Don't say sorry. It's your opinion. I agree. I think they're going to raise it, right? I do believe they're going to raise it. But I do think they'll bicker back and forth. And of course, a lot of finger wagging and saying, well, your side sucks and our side's better. Whoever says it will be doing that, basically the same thing. So I agree. They will not allow a hard default. If they did, it would be catastrophic for our economy. Absolutely catastrophic. Of course, I'm biased because I'm net short. But, drag it on a couple weeks and I'll see this, some more market weakness. The S&P and NASDAQ start to dip a little bit more. I'm fine with that. But ultimately, they will pass, then raise the debt ceiling for sure. So we have the NASDAQ down 1.45. You have the S&P, as you can see here, down 1.25. It's not as good in my perspective what happened with the S&P. We did break this kind of short term, at least the last this week's lows. Now, the range, this kind of zone here that the S&P is falling into, it's a little harder to read. I would normally put my line right around, I've got all these lines on the chart. Let me just start shuffling some of them around. I would put my line down here right around 43.65 is that next target if we continue down next week. And that would be a logical bounce point, simply because that's the basing action that it did in early August and late July. So we'll have to wait and see how that one pans out. Man, donations flying in today. Les, thank you so much. You're going to pay for my trivia tonight. I think I might go to trivia, ride the bikes down to a little local restaurant here and do some trivia. But thank you so much, Les, for the continued support and the financial contribution. I appreciate that. So moving up the ladder. You have the NASDAQ, you had the S&P, and you would expect the Russell to be there. It's not. It's much higher up. Crude oil was the laggard today. Now, you could argue that it came into supply. I'm going to say no. It was just a simple pullback. I still think that this overhead supply that we have up here at 73, call it 73.40, all the way up to 74 and change, and call it 74.25. That's your next area of supply. I still think that's in play. I just think it was overall market behavior today. You had the dollar rising 0.4%, so that puts a little bit of added pressure on there. So crude oil was your, what we call it, sixth or fifth place finisher. Fourth place? Am I on fourth now? I don't know. Down 1.09%. Crypto, and this one's actually still falling right now. Bitcoin was just slightly down today. I think the talk track out there is still how Solana and Ethereum's layer 2 technology, Arbitrum, went down. We can talk about that if you guys want. It was very interesting to see that happen on such a grand scale in crypto, but a little bit of a pullback here, 1.16% slide for Bitcoin, and if you want, we can look at some other cryptos later on. All right, moving up that ladder. Russell 2000, the RTY. Hey, look at that. It's not changed anything. We are literally dead center of that yellow box, which has been in place since January of this year. Crazy to think this has literally been a year of sideways action for the Russell. I'm going to keep moving this yellow box sideways. My guess is we'll stay in this for quite some time. It was slightly down, 0.25%, so still just slightly negative for the Russell 2000. Nowhere compared to the weakness that we saw with the NASDAQ and the S&P. And for you Dow lovers out there, let's take a peek at the YM, which was down 0.74%. Also, making new lows, and really for the better part of 2.5 weeks, just making lower lows, lower highs, and looking weaker. So there was a question that came in from, let's see, where was it? Who we talking? You talking about Peter Navarro? Yeah. Oh, let's see. How did Navarro get into this discussion? Let me see. One sec. I got to go back here. Did I miss Peter Navarro? I'm curious. How did Peter Navarro enter in this conversation? I actually taught a class for him, and while he is interesting, he's a little bit of a thief, I will say. Surprise to me. Let's see. Looked at you, pal. More Fed presidents got caught inside. No, never. Insider trading? Did you miss Peter Navarro? I got to wonder, Margaret, where did that one come in? I'm trying to find the discussion talk track where we talked about Peter Navarro, or how he came into the discussion. Is an interesting guy. I can tell you my story down the road here about Peter Navarro. I don't know if I necessarily missed Peter Navarro. I have a checkered past with that guy. He stole all my stories and wrote them down in his book and claimed them that they were his own. And then in the book, he attributes me and says, thanks for your contributions. Like, no, that whole chapter verbatim is my story, you thief. I told it when I was teaching a class for him at UCI for the MBA program back in 1999, maybe 2000. Nice guy, a little off his rocker sometimes with his political views and his disdain for China. But yeah, he stole my story. So anytime you steal from me, you're not high on my list of integrity type of people. All right, a long time ago, government shut down for a while. Was that an issue with the debt ceiling? Yes. So The debt ceiling was frozen for a little while, and they refused to raise it a while back. And it's happened multiple times where they don't raise it. Ultimately, they do, right? They come to some agreement and they raise the debt ceiling. But there comes a point wherein they stop raising the debt ceiling, and all of a sudden, government runs out of money, which right now, the expectation is that by October, we will run out of money. Go into a shutdown means we can't be paying our bills anymore, and then essentially we go into a default. So what's interesting is more often than not, it doesn't really hurt the economy like you would think. It sounds so daunting to say, hey, we have a government shutdown. We're not all paying our bills, and you have some employees that, hey, you're not going to get paid until we get this back up and running. In your mind, you would think that that's going to just cause these markets to crash. It usually doesn't. The markets tend to do rather well, but because I think the pressure is more on the politicians to raise the debt ceiling, and the market is expecting that to happen. Kind of a strange thing out there. All right, let's see. If USDT blows up, get ready. Yeah, exactly. What does IWM holding up while the QQQ? Alan, honestly, it's an interesting one. When you look at the Russell 2000 historically, and again, there's all of these market dynamics. I could ramble off tons of them, how there's these inverse correlations between assets or direct correlations, and there's these historical norms that almost stand the test of time, and everything works until it doesn't. And one of those is the Russell 2000. I remember my college days, they were talking about kind of these big four indexes, and they always made it out that the Dow was the biggest, strongest, most important one. I say hogwash, BS. It's only 30 components. It doesn't have a great representation of our economy. Then you have the NASDAQ 100, which, you can make the argument is largely technology. You have a lot of pharmaceutical companies in there, but it's largely tech. So to me, the market that matters most of all is the S&P. That's the dog that wags the tail, in my opinion, because it has the broadest measure, at least with regards to those three indexes I just mentioned. And then you have the Russell 2000, which is small caps. And when the markets are doing well, let's say the S&P is in a nice bullish uptrend, what generally happens is the Russell 2000 will have greater gains than the S&P. Why? Because the Russell represents small cap companies. And during bullish times, small caps do great, not just because their businesses are expanding at a greater clip maybe, but also acquisitions are abundant when the markets are strong. Because these large caps that would be in the S&P, the Dow, they have a lot more money and they're trying to position themselves in a better position. I may not have this new technology, but I can buy this small cap company over here with all of my paper gains or stock, and now all of a sudden the price of that small cap stock shoots up because of the acquisition. So generally during bullish times, small caps do great. That said, if we run into a period of time where all of a sudden there's some pessimism and things look like they're slowing down, the CEOs and chairmen and the board of directors probably will not be doing as much M&A activity, merger and acquisitions. So when that happens, you start to see the small caps start to roll over. And that is just the typical textbook description of what's been going on, or what happens. I don't think that that's necessarily in play right now. We've seen a market, take a peek at the longer term picture here. If we look at, and unfortunately I can't do the comparison here, but there's since just the 2020 lows, right? We could go back even further on weeklies or monthlies if you want. But right now, there is your big uptrend in the Dow, sideways action for about a month. Here is the NASDAQ, even stronger. Here's the S&P, strong as one of the strongest ones. And then here's the Russell. So clearly that tells you there's a slowdown in the M&A activity and just maybe not the optimism for these smaller cap companies. To me, if that persists, if we start to see this drop and maybe break that yellow box to the south side, then that to me paints a better picture of the economy. And if that does continue, then I would be looking to short some of the major indexes like the NASDAQ, S&P, and the Dow. All right, what do we see? He was a really good professor. He was kind of an interesting dude. Yeah, Mr. Navarro. Yes. I actually like the guy. I thought he was a pretty good guy until, again, he stole my stories. If you read When It's Raining in Brazil by Starbucks, that's the book where he took my stories verbatim and put them in there and claimed them as his own. Really kind of frustrated me. All right, we didn't get to the top. We did not make it to the apex of our discussion with regards to markets. So we stopped at the Russell and, a little bit about the canary in the coal mine aspect. This one just looks dead, does it not? If you ask me whether you should buy or sell the Russell, which many of you have, or many people have over the past 6 months, I would say, short the top, go along the bottom, or do spreads. Just keep it simple and don't don't overthink the Russell. Now, we have a choice to make here with something like the S&P, which is having a small pullback. And I think when we look at this bigger picture, this pullback we're seeing right now is nothing to worry about yet, right? It looks normal. Rally, pullback, rally, pullback, rally, pullback. No, this is normal. Big deal. Same thing with the NASDAQ. Rally, pullback, it's norm. It's when we start to drop and have a bigger pullback, then you might start to trigger some algos. You might get fund managers saying, I'm going to take some profits, etc., and continue to drop. Tom Barr says, if I buy the Navarro book, will you sign it? I'll go back to the small little credit he gives me at the back of the book and sign it right there. Sure, I'm happy to sign it. Tom, I still owe you a map of the world. It's sitting right here next to me. I just got to meet up with you and get you that darn map because you picked out my scene in the movie Baby when I was in Nepal back, 5-10 years ago, something like that. I was going to mail it to you, but I figured I would just see you in person sometime. I should have brought it by the office this week. I don't know what I was thinking. And by the way, I hope you enjoyed that class, that options class this week. So last one on the list. We've gone through the indexes, and now we come to G to the L to the D, which had a pretty shocking sell-off the other day. A $50 drop for gold in one day is pretty decent. I was actually expecting us to kind of make another charge at that 1840 mark. Didn't. We just turned around. It's 3 times in a row. It hit 1836 on the gold futures here. It proceeded to just fall aggressively. So today's action, even though it was the best performer, really a non-event. You had kind of a narrow range, and I'll show you that one right there. You had this kind of narrow range day, really end of the day pretty much unchanged, down 0.16%. And I think it kind of begs the question, where do we stand with gold? What's the thought? And if you look at the daily here, you can see you had a rally, a base and a rally out of there. So I think if it is going to have a little pause, right here is the place for it. But what's the real direction? I don't really see more big direction here. I don't see any real definitive price action other than chopping sideways. So it's unfortunate. I got out of my gold and took a loss on my gold options. That's okay. SLV is a similar one. I'll have to make a decision on Monday on what to do with it. And you guys can see that was my 22 mark. Here is I'll probably put a stop loss on it because I'm going to be executed. I think I had 24 contracts, or 24 or 26, I can't remember. I actually think it's 26. So I might end up with 2,600 shares of SLV on Monday morning with an average price at 21. So actually 21 minus 40 cents of premium. So really it's 2060. So I'm thinking I'm going to put a stop loss somewhere down below these most recent lows on this one. It doesn't look good right now to be holding this. It's either I sell some covered calls or I put a stop loss. And I think for me personally, what do you guys think you should do there? If you were long, let's say 2,000 shares of silver, and you're long pretty much from where this red box is, right around, I'm at 2060 would be my long price. Right now I'm technically up 14 cents, but I want to give it a little chance to run. You can't put a stop loss and sell a covered call. If you sell a covered call, it'll cancel it out. So you wouldn't be able to do that with the brokerage firm. So that's why you wouldn't be able to do it. So I think I'm probably just going to do the stop loss because obviously the loss is the most important piece. If I sell a covered call and it continues to crater, I collect the premium from the covered call, but I run the risk if this thing does continue to slide. And you see the propensity of the moves since June, July, August, and September has been fairly aggressive to the south side with some big gaps. So I don't know. We'll make a decision on that one. A mental stop. Yeah, mental stop is like the rhythm method, Alan. It doesn't work. Ask anybody who uses the rhythm method. They've got 5 kids and said, oh, it worked great for me. So yeah, I don't know. I don't think I would do the mental stop. And another reason for that is I don't like to watch things all day long. I've got a lot of other things I have to do. Katut says I already removed SLE from my portfolio. Looking forward to buying it back. Yeah, at a lower price, right? Sell some puts. Sell some puts and buy it back lower. I mean, if we get below this 21, it's actually a little higher up. I'll try to peg it to it. But 2040, if you get below that, you notice you got 2, 3 unfilled gaps here. It had this huge shot up. It jumped from $18 up to 2050 in 2 days. That's a pretty significant bounce for something like silver. So I don't know. I'll let you guys know how that one transpires on Monday. It's obviously something that's on my plate to deal with, but we'll let you know how it goes. I'm leaning towards the side of putting a stop loss on it down below those lows from September and letting it run, because I do think that the inflation talk and the fears of the debt ceiling debacle, or at least the stalemate for a little while, will increase, and I think that that's going to cause people to run to commodities and tangible things. All right, let's see. You can't set stops on put options. How do you manage the risk on those? Well, it's not that I can't put a stop on a put option. I'm selling a covered call. So if I sell a covered call, that call already claims those shares. So I can't have a contingent order against it, because it would change it from a covered call to a naked call. It wouldn't work. What else we got? I stack bullion. I don't care what it costs. Just don't tell me your address. I'm coming for it. Give me that bullion. All right, so that was kind of your basic run through of the top 7 markets. Hopefully, you guys got some out of that one. I want to go into a little bit of the Forex side of things. There were some more some Forex moves which I think are interesting, specifically the euro. So let me bring that one up for you guys. There's your euro. To the last 2 days of trading with the euro, pretty aggressive to the south side. It doesn't come as any shock, right? I was going long the dollar, which is the inverse of this. And you can see today you had a continued sell-off in the euro. So we look at the Dixie. You notice we had that double bottom. The day that this came into this zone, guys, is when I closed out a good crypto position, and I was looking for some place to park it. And I decided to park it in US dollars as opposed to going to something like the pound or the euro. One of the great things about crypto now is you can put your crypto in different denominations of fiat stable coins. So normally when you go to a stable coin, it's like I'm going to a US dollar based one. Well, if the dollar was at supply, I would be looking for maybe going long the euro or the pound or some other currency against the dollar. And so far it's doing well. That means I'll be able to buy more of the cryptocurrencies that I like when I buy back in. So anyway, thought that would be it was actually a fun topic to talk about in the Crypto Investor Live program, is looking at the different stable coins and the potential there. So euro, continuing. The question now is, since I thought it might stall here in this little area of consolidation, it didn't. It ripped right through it. Now the question is, we get down to this 167 mark, then what? Right? You guys can see that it feels like it's forming this gigantic head and shoulders pattern. It's abstract. Okay, it's not like a Picasso painting, but you look right here, that seems to look like not necessarily head and shoulders, but it's definitely starting to turn. You see the weakness here in that euro. It's making lower highs. It's making lower lows. To me, this does not look good for the euro. If that does break, again, you have to go back all the way into early 2020 to find some demand zones, and right around 139 is where I see the strongest one. So you're talking several hundred pips on this one before you find any real demand on the euro. So I thought that one was good. I didn't see... Canadian has a similar picture, although it does have a better demand zone based off this big hammer formation that happened on the 20th of August. And then the British pound, we looked at that one the other day with David Warner. Not as good. What else do we have? Boy, we could dive into the crypto space here all we want. For those who are wondering, Solana. This was kind of interesting, and I think I mentioned this to everybody. We'll keep it brief because I did a deep dive in the crypto program. But you had the darling smart contract chain that everyone is talking about and raving about, which is Solana, went down for 20 hours the other day. Literally shut down. And imagine you had a system where you're transacting on, where you're keeping your NFTs, or you're buying and selling things, you're transferring, or just having your money sitting in this technology with Solana tokens or coins, and all of a sudden it's down for 20 hours. You can't move it, can't transfer it, can't do anything with it. You're literally dead in the water. The entire ecosystem was down. And a lot of people were commenting because at the same time, Arbitrum, which is a layer 2 technology for Ethereum, went down. And people were calling it kind of the same thing. It's like, no, you guys, it's not even close to the same thing. If you owned Ethereum and you were using the Arbitrum network, and that goes down, you can still go and use the Ethereum network. The network was still functional 100%. It was just this other technology on top of it wasn't working. When you look at something like Solana, the entire ecosystem shut down and crashed, right? You are no longer accessing anything. So very an apples to oranges type of discussion, but that was something of interest. It's funny, I sold all my Solana, again, you guys know this, right where this blue line is. That was at 139.69. We actually got down below it a little bit briefly today. I would be interested in buying Solana again if it dropped significantly lower. Like, I think it's got to get down to the 103, 105 mark for me to be happy buying some. Oh, FTX. I'm definitely a fan of FTX. I do own FTX. Do I trade FX? You asking me? I do, but very rarely. I used to be very active in the spot market, but rarely will I go out and trade just because I find so many other opportunities in different markets. Normally, when I was very active in the FX, it was on the spot market, but now futures make it so much easier to trade. Unless you're trading cross pairs or exotics, you know, the futures market makes it very easy. And most of my trading, it was an interesting discussion with David Warner the other day. You know, David Warner says he doesn't really trade dollar-denominated pairs. That's pretty much all I trade. I really look at 6, 7 sets of just dollar-denominated pairs. That's pretty much it. So, all right. Wow. Let's see. What do we got here? A lot of stuff. Please look at junk. JNK. You want to look at junk, huh? Let's go look at your high yield. Funny that they call it, it used to be called junk and now it's just called high yield. Well, a couple things to look at here. This is obviously a phenomenal chart, and what you're looking at here is a basket of high yield corporate bonds. Now remember, I think part of the reason that you see these doing so well is the Fed said they're going to be buying corporate debt and putting a backstop behind it, making it look better and better and better. Well, you know, if you look at the overall yields, unfortunately I don't have the yields for J and K. I can pull up the 10 and the 30. You know, you can see that those yields have been slowly ticking higher here for the U.S. for the 10-year. Now, of course, J and K is going to have higher yields. What's the thought on it? Well, it's looking bullish. So if you're holding this, this is the underlier, not the yield. So this means that the yields have been dropping and dropping and dropping. I don't think that this is going to continue to last. The only reason I say that is look at what's going on with corporate debt. High yield. If the Fed, who said they were backing all this corporate debt, which is fine, I guess, do what you got to do, they're backstopping it. And if they pull away from that and they're no longer supporting it, all of a sudden, the downgrades which have been happening with regards to credit ratings could get even more considerable. Therefore, putting some of these guys in risk of default. And as the risk of default happens, what's going to happen to yields? Yields are going to spike up again, and what will happen to this chart, the price chart? The price will decline. Now, having said that, Margaret, or who asked you, Margaret, this looks really strong. If this was a regular stock, I'd say it looks like it wants to pop to the upside. I'm thinking macro picture here, and knowing the Fed's actions and pulling out of the corporate bond market is a big negative piece in my opinion, so we can continue to look at junk going forward. But right now it doesn't look, it looks great technically, but I think from a fundamental perspective, I would be careful with J and K. Brendan, this is also something we talked about at length in the Crypto Investor Live program, but I'll keep it high level here. Yes, Coinbase issued bonds. They issued 7-year and 10-year bonds. They were looking to sell $1.5 billion worth of bonds. They had $7 billion worth of offers for their bonds. And what I think is most special about this is you look at somebody like Tesla. Everybody loves Tesla. Tesla sold their bonds at like 9%. Why would you have to sell it at 9%? Because the investors are going, man, you're risking default. This does not look good, right? It might be a problem for you going forward. Therefore, we need a higher yield to loan you this money. What do you think? Well, some of you guys know, but Coinbase's bonds, you would think it's pretty sketchy business, right? It's crypto. Oh, it's unregulated. It's not safe. Their rates were 3.375 and I think 3.5. That's incredibly good. Like really good. That basically says investors, this isn't junk bonds to them. This is actually stable. This is safe stuff. You're only going to get 3.3% yield on it. So looking pretty good there on Coinbase's bond front, but I could do a whole nother session on that, but we'll save that for the Crypto Investor Live. Gensler is probably crying. Oh, trust me, Brendan. He will make his statement one way or another. One way or another, Gensler will step up. I think that, the big thing that he'll hang his hat on will be raising or removing payment for order flow. Can you provide your views on USD pen? Trying to see if I should buy pen. Now that's ripped up. It's pegged to copper and gold. I'm afraid it might do. I don't know if I could. Let's see if I get that one. I have to say, NJ, this is something I don't trade. I've never even looked at the Peruvian dollar, or Peruvian sol, excuse me. I mean, obviously, the trend is your friend on this bad boy. It looks great. I think I would have issues with liquidity on this, but it looks to me like it's just a buy and hold. I mean, this is one of those things. Are you getting a hyperinflation type of environment? I mean, you're seeing a massive increase in the value of USD versus that, if that's what you're asking here, and value against that Peruvian sol. Look, I just say keep it going. I'm afraid it might do to the U.S. dollar, Argentina. NJM, I apologize. Those are outside of my purvey of expertise, so I will plead the fifth on that one, on Argentina as well. All right, there's the Argentine peso. Goodness gracious. And so for those looking at this is what hyperinflation and mismanagement and bad corrupt governments can do to your currency. This is unbelievable. And what you're looking at here goes all the way back to 2013, when the U.S. dollar could buy you 5 Argentinian pesos. And now it can buy you 98 Argentinian pesos. So anybody looking for a place to go travel, want to go on vacation, want to have some fun and get a real big bang for your buck, Argentina is the place to go. They have serious inflation problem right now. This looks really, really, really ugly. Their currency is buying less and less and less and less every single day. And this is what the U.S. dollar buys you of their currency, which means their currency is losing value. But wow, I agree with Brendan. What a ripper of a chart. Holy cow. I mean, their currency hasn't had a down day since 2019. Or sorry, an up day since 2019. Can I bring up the Zimbabwe? Oh, let's see. I don't know. That'll be a tricky one. Let's go USD Zimbabwe dollar chart. Let's see if that helps us. See if we can get it. I might not be able to. We'll see if I can. Go full chart and see if it lets me go back like 20 years or something. No, it won't let me go back. You're going to have to go back to that one period where it was just off the charts, literally off the charts. Let me see if I can find that. No problem, NJ. I would actually love to go down and check out those cities personally. Let me see if I can find a chart for you. Images. Usually, so there you go. There's your hyperinflation. But this is all in percent. It doesn't show you against the USD, but I'm sure you could find multiple charts that look rather similar to this. It just went parabolic. And now the Argentinian one doesn't look as bad, but it certainly has that really, it's starting to go parabolic, right? It's looking pretty darn bad. All right. Sorry, we went off topic there, but cool. Can it be Zimbabwe too? No way, Brandon. You're not going to get to that level. No way. If anything, it'll be the U.S. We're looking pretty bad. Let's see. Do you consider your FX trading a new strategy, or more or less the same as supply and demand? Yep. No, all my stuff's the same, man. The only one I think is different is with options, because you have to be thinking differently. I mean, if I'm buying the euro dollar, right? Or right now I wouldn't be buying because it's selling off. But euro came into supply recently. I'm looking at the supply level and saying I'm going to short the euro at this point. Now, if I do it with options, I have to do things differently, right? I can straight buy puts, I could sell calls, I could do other different strategies. So to me, it's a little bit different when I have to trade options. I have to think differently. But if I'm trading stocks, trading equities, trading Forex, heck, even trading crypto, same thing. I'm looking at supply and demand. And just against the worm mask. Why does he look like you're gonna get like the Scooby-Doo at the end? He's going to come in and take his mask off. I would have gotten away with it too if it wasn't for you damn kids. All right, what else do I have here? So Valkyrie asked us earlier. I think I answered this one. It says it looks like the SPY's downward movement is not stopping with a typical snapback. Feels like it's starting to break a little bit of its upward trajectory. SPY at 436 is where it last bounced. But given the monthly trend and what looks to be a pretty convincing up channel for the last few months, do you think today's actions is indicative of a breaking of this trend and a further move down? So let me just real quickly take a peek at that S&P on a monthly, which we have not looked at. And we'll go to the monthly. Again, this looks like the inflation chart of Argentina that we just looked at, or Zimbabwe. But, if you're talking about the monthly, it's the first time we've really had almost an engulfing candle. Now, we still have another week. This could end up being an engulfing candle. And if you talk to somebody like Bob Dunn, good night, Shadow. Have a sweet evening. Hope you have a great weekend. If you look at Bob Dunn stuff, he talks about the longer-term charts when they have these reversal patterns. And if this red candle closes below the low of the previous month, below August low, which was 43.47. Right now we're at 44.08. So if we get down another 60 points or so and close there, now granted we've got another week, so we've got plenty of time here, week and a half. You could see a lot more negativity come into the market because of people who base their decisions off of chart formations and patterns like that. That would be a bearish engulfing formation, and then all of a sudden you have to, I think, you recheck your priorities and start looking for the short opportunities. So that's what I would look at, Valkyrie. I don't know. I'm not going to say this is the end, but everything has a start, and I think if we look here, just the last 2.5 weeks has been a good start. It's just a pullback at this point. It's just a pullback. But, you could say it was just a little infection. And then all of a sudden, oh, my whole finger hurts. And next thing you know, you got to take your arm off. So let's hope it doesn't get to that quite yet. But we'll see. Again, next week is really going to be the determining factor with this one. That's pretty much it. You want the 200 period on that one? I'll put on the 200 period for you. You're way down there. If you go simple moving average, you're miles above it. Long way to go. I mean, heck, if the S&P gets down to 4,100, woo-wee, that will be fun. Another 300 points down. But if we put on the 50, you notice we just broke it, right? So again, you look at different metrics and measurements. Again, I'm one of those believers of self-fulfilling prophecies. And as you guys can see on this chart, we just broke that 50-period moving average today. I know this triggered people to sell. I know that people came into the equation like, hey, you know what, I'm going to look to sell, get out of this position because it broke we'll just say a longer term uptrend in that 50. Last time I did it, it ripped right above it, right? So we haven't had a successful close below the 50, meaning it's closed and continued to sell off. But we've had multiple times where it's broken, went down for a day or so, and then ripped back up. So I'm still not convinced, even though it breaks the 50. What I need to see is this 50 flatten and then start to point down. Now, another couple days of aggressive sell-off could cause the 50 to turn. We'll have to wait and see. It's okay. Wow. Boy, you guys are torturing me with the Denny's. It used to be my go-to. I used to work night crew at a grocery store from 10 at night till 6:30 in the morning, and Denny's was our ritualistic stop with the team. Oh, man. Denny's. Oof. Man, that was a rough time. All right. That was it, and there was one more. I'll bring this one up. This is for Mike, and then I'll finish up for today. So Mike asked this one. It's kind of interesting. A lot of these SPACs, and we talked about a few of them on the program. It looks like most of them are going to be failures. There might be a couple that succeed. And he mentioned ARQQ, LIDR, and OPAD. He says, I've noticed that there's this pattern where they kind of hover around $12, have a real sharp drop, and then spike up. Well, here's the charts he's talking about. So here's ARQQ. And again, Mike, thank you for sending me those pictures. It's awesome. And you guys can see that there was this pretty sharp drop and then just a massive rip up. And that's on ARQQ. You also have a similar picture here on OPAD. And then a similar one, which is a little bit earlier, on one called LIDR. So I don't know particularly, Mike, if there's some pattern here that you could identify and say, hey, wait for this sharp drop of 20% and then look to buy along. I personally, after my experience with VIH and not feeling like there was due transparency, I'm probably going to stay away from any SPAC until they actually complete the merger, because I feel like right at this point they'll just say they're going to buy something, let it spike up, sell out of some of it, and screw people over in the process. So until they move over and actually do the full conversion and bring that company public, I'll probably stay away from them. It sounded too good, not too good to be true, but it sounded good early on, but just seeing what happened with VIH, was not happy with that one whatsoever. Nobody knows how dry I am. Oh, well, I'm not. I have a little sapsel here. Yep, most of them are issued with a $10 floor price. That's kind of the common practice out there. All right, any last minute questions before we wrap up? I don't have any show or any guests scheduled for next week. Actually, I do. Bill Addis is going to be the guest on Wednesday. I'm pretty excited about that. He sent me a nice email with a whole bunch of stuff he wanted to go over. I was like, let's do it. Bring it on. Let's talk about it. A lot of interesting things happening with the bond market, especially with regards to yield curve and what the Fed is doing. It'll be interesting because we have him on Wednesday, and on Wednesday we also have our FOMC meeting, which might also add a new talk track to their bond purchases of short-term treasuries and also mortgage-backed securities. If it doesn't start cutting this month, I'll take a bet that they actually start to slow down their purchase of mortgage-backed securities by a few $1 billion per month in October. If not, it's going to happen in November, but I think they need to start slowly pulling back the purchases of mortgage-backed securities. Why do you need to prop up the housing market anymore? It's already like way, way, way higher. All right. You've actually stayed away from Jeff told you to stay away from the markets this week. I only stay away from markets on pronounced holiday weeks or vacation weeks. So, for example, 4th of July, never trade that half day. Thanksgiving week, forget it, go away. Christmas, go away. And usually the first week of January, I try to stay away from it too, just because of weird volatility and institutions on vacation. So, there you go. Yes, watch the Jewish holidays. Rosh Hashanah, Yom Kippur. Amazing how those Israelis tend to be pretty influential in the financial markets. All right, guys, that is going to do it for me for today. I don't think I have anything. There was no real important stuff with regards to economic announcements. Oh, yeah, I guess you could talk about the retail sales numbers today. Retail sales numbers were really good compared to expectations. That was probably the main talk track that I noticed for today. Although, did it have a dramatic impact on the equity markets? Not so much. Let me bring up that just so I can show you guys. I'll bring that up over here. Throw on the chart of retail sales. So they were expecting it to go from negative 1.8% to negative 0.7%. Actually came out at positive 0.7%, which I think was interesting. So here is the retail sales chart. You guys can see that one full screen. You'll see that little 0.7 there. It's what's noteworthy about this chart anyway. Let me scoot this over. Is their expectations have been negative for the past 4 readings. The past 4 months, they've expected retail sales numbers to be negative. 2 out of those 4, it's been positive. So I feel like they're setting that bar really low so that when we do get above it, it has a little more market enthusiasm behind it, more of a market pop. So that is your, I guess, your last little piece of info for the day was your retail sales numbers. And there you go. Cool. All right, everybody. I think that's going to do it for me for today. Yep, I think I don't see any last minute comments coming in. So anyway, I hope you guys enjoyed that. For those that were in the Crypto Investor Live, I'm working on that spreadsheet I told you guys I would give you. If I can get it done in time, it'll be in my OTA under your course materials for Crypto Investor Live. That should be in play. I'm hoping Tuesday, maybe right after before we do these sessions on Tuesday. But that said, we'll have a show on Monday like normal, and we'll see how the rest of the week goes. So David, hey, thank you so much for participating in CIL as well. The rest of you guys have a fantastic weekend. If you have comments, questions, feedback, send them in at TraderMerlin@gmail.com. Hit that thumbs up, subscribe if you're new, and I'll see you guys on Monday. Take care.